Okay, hi there, traders. Now, I'm just going to have a quick chat about zones versus levels um, in trading and trading around zones as opposed to trading at what you determine as a level, as a price level. When I say price levels, I mean the high or the low, or a specific 1 point area, if that makes sense. So something like that. That's the one level, that there, that there. I look at it in terms of zones. Okay, as many of you may know, if you've been following my rants for a while now, you'll know that I'm looking at zones, and zones for me indicate where there's obviously been a lot of action, and there could be previous action. So a level may have come down to support, a support zone, banged around there for a while, and then gone through or gone up. It doesn't matter, but that's a potential active zone that could become active or reactive again down the track. So we're always looking for areas where there's been interest prior, and generally if you're coming into a resistance zone, you've got to really be careful. I feel that if it's coming to that zone and it's the first time it's coming to that zone after working off that zone, say for example, if it's come up to it a few times like here and it's worked its way off, when it comes back up into it for the first time, again, you've got to be careful, because you know that there's stops above there, you know that things could get triggered, you know that can be an action reaction off there, like it might just go straight through, retest it and go, or it might just react flush and react back down again. You don't know. And that's why I'm a really big advocate of trading on what we term as shoulders. If anyone doesn't know, a shoulder is, what I'd say is a lower high here, for example. That's a shoulder there. Let's just mark a few up, for example. I took that as a shoulder. It's traded up into this zone. It's failed. It's got a shoulder. That's where you want to be short. Maybe not just there, but that's a sort of a minor shoulder. You've got the shoulder in here. You've got shoulders in here. So you've got all manner of little. That's probably not so much, but you know what I mean. So what you're seeing is that the shoulders, they play out when the market has sort of given up on breaking through a level. Okay, and basically it's coming up into a level, up into a zone. Sorry, I shouldn't say level. Coming up into a zone and it fails. It's when there's more sellers. There's a lot more sellers than buyers, and the buyers are sort of given up, trying to press it through the zone, and then everyone's exiting. So you've got buyers that may have got it wrong, have to exit selling to the market, or you've got new sellers coming. But when it's a lot more clearer, you get that sort of pullback, hesitation, no follow through from the buying. You get this little shoulder trade, and that's where you want to get short, because you know there's a lot of people probably that have been buying around here into the zone that are going to get squeezed out. Okay, so I'm always thinking in terms of zones. I'm marking up my charts, my prep work in terms of zones as well. So if we just go, for example, this, you've got a high up here, I would probably mark that up. Coming into that level, if you're trading around here, you just mark it up, and then you might get a secondary zone, well, an area where it's traded through before. Now you can start to extend that out, because you can take into account these sorts of highs if we just move that out. So you know that, okay, we traded in there, we failed. Okay, when you got a clear failure off a level, off a zone, that's where you want to sort of be. There's been another minor reaction just below it, couldn't quite get there again. Okay, it's failed deeper. And we've had another big go at it. It's failed again, and it's come back up and failed again. So you can see that and this last time around, it's kind of failed a couple of times at slightly lower levels, and it's come off. But you can see that it's not a hard and fast level. There's not one level that fits all. Okay, and I feel if you're trading and if you're looking at a zone, what it does, it gets you in the right mindset to not just put a sell order at that level, with your stop above, or if you use stops, that is, with your stop above, and then sort of hoping that's going to hold up again. And you can see, we'll show you a few examples, but you can already see a few here when the market will get through, pump through, and then fail. So you could be right, but at the same time, you're trading it wrong. You might get stopped out a few times, or you might get stopped out and completely give up, and then you see it play out in your favor. I think I've got just things beeping off there. Sorry in the background. Anyway, what we'll do, and that's why I think it's important to, like I said, think in terms of zones, because what you're doing, you're waiting for that reaction off, you're waiting for that shoulder, you're waiting to trade in the prime zone. Now, this, for me, is prime. You can see that if we just go and mark up this now in terms of levels, if you were trading into that high, okay, you might think, for whatever reason, you might think that's a clear high. All right, you're selling to that high, you might have a stop a few points above. I'm not sure what that is, but say it's a few points above. You may or may not get a stopped out there, and then bang, try it again. It takes out that high by a few more points. So you've got your stop above. So traditionally, retail will be looking at, or retail traders or new traders, I don't like to say retail, but newer traders will be looking at it in terms they've taught, okay, that's the level, that's the high. You put your entry below and your stop above. So if you get it wrong, it keeps going. But the market time and time again, especially in indices, currencies, crypto as well, they will flush the level because what they're trying to get is liquidity. And they know there's a bunch of liquidity above a high. Generally, there's a bunch of liquidity above a high, and they'll start to spike into it. Algos will trade just this area, just into that, and then stop. And then all of a sudden, that buying strength is gone. That disappeared. The buying liquidity is gone. Everyone's got set on some new sell orders. There might be, someone that's been trying to sell it around this zone here, around this area, selling it, pumps it through, gets a bit more with some, they've got sell orders above. The buy stops get triggered into it, and then it falls away, and they might have to do it again before they can get set. Okay, so that's your bigger positions that are trying to get set around an area. They're not ever trying to get set at a specific level. Okay, they're trying to get set at a specific area or a zone. Like we say, that's why I think it's important to mark up a zone, because you don't want to be trading messing around when it hasn't really shown its hand just yet. Okay, like here, it gets pumped out, flushed out, and then it drops, and then you get your shoulder. That's where you exactly, where you want to get short in there, because I think, yeah, you might be giving up a few points there, but the probability is a lot higher, and you do get some good follow through. Okay, so this time, if you sold it into that level, you may have been looking at here, sell it here, probably not particularly here, but you sell it just into that level there, you get stopped out. You try again, you get stopped out, you give up, bang, you get it right. Okay, you can see it's done it. If we just do another line, did it here again, into that high, flushed it, dropped. You got your shoulder just after that. I mean, that's prime area to sell short. Whether it's followed through or not, we'll soon see. So if we just go along, you can see time and time again, takes it to high, flushes it a few times, and then fails, may flush it again. So you can see this time, high, new high, new high, new high, new high, and then bang, you drop. And then you start to get some weakness come into the market, and you can start to jump in short. Okay, and you can see it time and time again, it's popping into that same area. So we know that it's selling from here. If we look at it from previously, not so much here, but up here, there's a zone that they've built, here. They keep trading into it, but they're selling around that area. Okay, we don't know when they're selling. We're just going to keep trickling into new highs and then fail. We don't know what's going to happen. We don't want to try to guess. All we want to try to do is trade off the crumbs that some bigger players are leaving. Okay, we want to trade off the hints, or we want to follow the trail. Okay, and the trail for me is just those shoulders. Okay, so we're getting here, same sort of thing, flush, 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 dump, and then you get your shoulder you can work into. We talked about that. And again here, the market may have, this is a minor double top, it's going to the same zone, and then we get our shoulder to work off. Okay, so I think it's important to just take note of a zone, to mark out your zones, as opposed to marking out a pure level. If we just delete all that out now. If we just go along, we could probably see, well, probably not as many examples now, but you'll see that I think if we go on the bigger picture here, you've got a zone it's played out down here. So I'll just mark it up, and I'll tend to widen that zone a bit on the bigger picture, because this is only a 15-minute chart. So if I'm looking at a half-an-hour chart, that might be a clear, a smaller zone to look at. But you can see that it's quite a big zone. We've come down into that level, flushed it down, and when you don't carry on that far after taking out a low, it's kind of the area you want to be marking up, because you know that we've got reaction here, back up, didn't go too far, then it reacted down further, a deeper penetration into that zone, and then we've reacted up and off all the way back up here. We've come back down, found a bit of buying just in here, minor level, chopped around here, flushed down again. So we've got 1, 2, 3, flushed into that same sort of area. We've got the high up here, a high here, these two match. Then we've got a little deeper penetration and deeper penetration again. And then we start to get some higher lows off this level. So as soon as you start to get some higher lows, you've sort of got a double bottom here into that zone. And then this is where you want to be ready to take action on the long side, because at the very least, if we just go, range bound back up to the top end of the range, you've got a good trade from the bid zone up to the offer zone, we say. Okay, you're trying to look for that shoulder. You might be trading somewhere in here to get long. You might have to drop it down to a 5-minute chart to get a prime entry. But you can see what I'm saying with zones. If you go back on your charts and just pick out different areas, you might have, I would say that's a good zone, because many times if you've got an area which is formed, say it's traded up there, you might get it reacting off, it comes down, flushes some, brings in some sellers, flushes out some buyers, trades back up there again. That gets people excited, because we just popped through that high, then it starts to fail again, and it's just squeezing them out in that zone. So what it's doing is luring in some longs, breakout traders through the high, okay, luring them into that same zone. It's just a trap they're setting, and then squeeze them back out with a lower high, and you want to be trading off that shoulder. I mean, you might have a deeper correction, and then they may, I say they, and the bigger traders may think, okay, we still need to get something set. We're not prepared to drop it yet. We're not prepared for the market to go down, and it gets lifted, algos are driving it back up, and you might fail again, take it out, and then you get that lower high. You get the same sort of action. So you can see it's traded in that same area a few times, but it's not a hard and fast level. Okay, so in essence, what you want to be doing is going through your charts when you're prepping your market, whether it's whatever time frame I might trade. I might prep on a 30-minute trade chart, especially for the Hang Seng if I'm trading that. If I'm trading the ASX 200, DAX, Dow, whatever it may be, I'll be prepping it for zones, and I'll be trying to take into account what's happening around those zones, because you know that the market's going to be setting traps all the time. Okay, so if you're thinking of it in terms of zones as opposed to just a hard and fast level, I think it can keep you out of a lot of trouble. And you're trying to trade when there looks like there could be a breakdown. Now, at this stage, say, for example, at this stage, we don't know if it's just going to keep down, so we can go short off that shoulder, it turns around, okay, we might take a break-even trade or a small gain, but I think you can really minimize your losses. Okay, it's not ready to go down. You try again, you'll be watching this zone, you're watching that high, pushes through, comes back down, fails at a lower high, okay, you want to go short there again. Okay, so this is kind of the mindset we're going to be having. All right, we go short there again. Okay, we get a bit of follow through that time. It doesn't really follow through as much. It's had a big retracement here, high, low. Okay, you'd either be out, taking a small gain again, or taking a partial on the way down, or whatever, however you trade. Okay, and this third time round, we want to be trading again off that short. Now, this could be the time when we do get a lot more follow through and we get a new downtrend. We don't know, or it comes back into that zone. But either way, we're trading in a high probability area off a zone, and we're trying to take advantage if it does follow through. It may take us a few times, but I don't think by doing this and not selling straight into a zone and getting stopped out each time, you actually could take any small bites at a move, or you might be getting on the right side of the move. Okay, and if it follows through and just keeps going, then no harm done, because you haven't traded off the shoulder. Nothing's happened. It's just gone straight through. Now, if the market, I attack these levels in two different ways. If I've marked up my zone, for instance, let's just do this again. Final bit, whoops. If that's a zone that I've got interest in, okay, I'll be looking at two things. I've just marked that up from previous price action. Say there's a price action to the left-hand side. We don't know whatever's happened here, but we can see at that stage, just go down. At that stage, I've got it marked up. Just do a bit better. There you go. Okay, so I know that's where I want to be trading. I don't want to be trading down here because the next support could be miles away. I want to be trading at that zone. Right, so if the market starts to press up, I'm looking for two scenarios after that. Let's just change it into red. Okay, I don't know whether it's going to fail at that zone and I'm going to get short, or whether it's going to go through this time, but I'm looking at basically for longs, I want to see a deeper push through, trading stops out, because then if it takes out the stops and that's all it's going to do, it's going to fail pretty quickly. If it's not, you probably get a bit of follow through, some extra buying, some breakout, and then the market might stall, hover around that level, but it starts to find buyers, and that's what I'm looking for there. Okay, and then I'll be looking to get long off the level. But if it's going to fail, I expect it to punch up through, fail straight back down again. Okay, and we might get some of this, and then some follow through on the downside, and that's when the zone is re-establishing. It's confirmed again, but this time round it may not have confirmed, and there's long. So anyone that's been shorting into this zone expecting it to hold again is going to get squeezed out on the upside. So that's the two scenarios I'm looking for, and I wouldn't be trading. I'd be trading something like that if you start to get some expansion back up or through, and it's continuation trade, or you get that working off the level and you're just trying to take the shoulder trade back down again. Okay, so that's pretty much it, I guess. It's worth just going through some charts, trying to mark up some levels, some key zones. Let's just quickly do a 30-minute chart. This is the Hang Seng. I would just be spending time. Oh yeah, let's just get that yellow. I'll be spending time. So I tend to pick these kind of things. That's the previous high. You can see it's pumped through a couple of times. I don't take much notice of that little push through. I wouldn't take that, but I'd take a zone, something like that. Even maybe a bit lower, because it's traded into there, traded a few times. So I would count those three touches there as maybe the bottom end of the zone, top end of the zone, sort of the highs. But I'd expect that is a zone where we may get some action again later. You can see up here it's pushed into that zone. This lower high could have been an area to short. Okay, and then from there, you see once we start breaking through the anchor, we push through here, we pop up a shoulder, 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 all the way down, and we're working our way down. Okay, then same sort of thing. We were just talking about that area in there. That's pretty much how I would be going through the market. We've got that zone there. Again, I would take if we're coming into this area here, I would take that as a bit of a zone. That low, that low, these two areas, mark that up as a bit of a zone. You can see it's pumped straight through. So at that stage, we don't know whether it's going to keep going through. So we're looking for a retracement, a lower high to build, then maybe sell into the lower high, expecting extension down, or look for a deep correction back up above the zone, higher low, which I think I actually did trade that higher low just in here, and then a rally. Okay, so yeah, just spend some time going through practicing your charts, and then just see how you go. Any questions, send it to tradethestructure@gmail.com. Okay, enjoy, guys. We'll speak to you again soon.